Welcome to the monthly economic update for the month of March 2026. So when we take a look at the Sri Lankan economy, the economic growth rate for 2025 was concluded at 5%. So this growth was achieved despite the challenges faced due to the US tariffs in April as well as the cyclone Ditwa in November. So Sri Lanka reached rupees 13,129 billion in 2025. If we take a look at the sectoral breakdowns, the agricultural sector has 1.4%, industrial sector is at 7.8%, and the manufacturing sector is at 6.2%. On another positive note, if we take a look at the construction sector PMI, it is at 75 in February 2026. So this PMI was reached after the peak that was achieved in July 2020. So even though in February this peak was achieved, there is uncertainty regarding the ability of the construction sector to survive due to the Middle Eastern crisis, because the inputs required as well as the cost of raw materials are facing issues during this time period. Inflation remained positive in February 2026 as well, with the CCPI headline and core being 1.6% and 2.1%, and NCPI headline and core being at 1.6% and 2.2%. So the CBSL also mentioned that they are expecting the inflation to reach 5% within the first half of 2026. So this is led by mainly the volatility in fuel prices that is caused by the Middle Eastern crisis. So when we take a look at the external sector, the trade deficit for the month of January was reported at US dollar 654.6 million, and the tourist arrivals for February increased by 12.9% year-on-year basis. However, the tourism earnings declined by 4.9% on year-on-year basis. So there are several opportunities that were created due to the Middle Eastern crisis for the tourism sector as well, and we will get into discussion in the next segments. And when we take a look at the interest rates, the overnight policy rate was held at 7.75%, and there are no significant changes in interest rates as of yet. And in terms of the rupee appreciation, the rupee appreciated by 0.55% during the year 2026, and the official reserves were held at 7.28 billion US dollars as at February 2026. Talking about developments in 2025, the public debt declined to 98% in 2025 from its position as 103% in 2024, and that's expected to reach its target of 95% debt to GDP by 2032 as per the target set by the IMF. And more on the composition of debt are provided in the monthly economic update for the month of March. Taking into account the global developments, especially in the Middle East, we have included a segment on the Middle Eastern crisis and how it is affecting Sri Lanka. And we have taken this crisis and assessed it under three scenarios, one being sharp de-escalation of the crisis within the next 2 to 3 weeks, the second scenario being extended conflict of 3 to 5 weeks, and the final one, which is more unlikely, that is prolonged conflict that goes beyond 6 weeks. So an in-depth assessment has been done as per these three scenarios, and the various sectors that would be affected are also included under the monthly economic update for this month. Talking about the Middle Eastern region, 38% of Sri Lanka's remittances come from this region. So we have considered the sectors that employ a majority of migrant workers and assessed what this would mean for Sri Lanka as an economy where a majority of inflows of foreign exchange are coming through these remittances. Finally, we have also included a section on the import tax reforms which came into effect on 1st of April 2026, and this section includes details about restructuring of duty bans, targeted protection for selected imports, phase out of cess levy, and extension of customs duty surcharges, and adjustments made to other import taxes. So to get an in-depth understanding of the Middle Eastern crisis and how it affects the country, as well as the performance of Sri Lanka in terms of the country's growth and public debt in 2025, as well as the import duties and the reforms that were made live in April 2026, I would like to invite you to visit the Ceylon Chamber website for the monthly economic update for the month of March. Thank you.